Bank fraud has had significant economic impacts in various countries, destabilizing financial systems and eroding public trust. In Vietnam, a major fraud case between 2007 and 2011 resulted in losses equivalent to 3% of the country's GDP, highlighting weaknesses in regulatory oversight and causing a tightening of financial controls. In France, a 2008 trading fraud at a major bank led to billions in losses, exacerbating the global financial crisis and prompting stricter risk management regulations across Europe. The event underscored the fragility of financial institutions during turbulent economic times. India also faced a large-scale bank fraud in 2018, involving fraudulent loans that resulted in billions of dollars in losses. This incident strained the banking sector, led to a significant tightening of lending practices, and prompted government intervention to stabilize the financial system. These cases show that bank fraud can have widespread economic repercussions, leading to regulatory reforms, reduced investor confidence, and slower economic growth. Aloha,
Bonjour. Hallo.
hello,
Hola.
hujambo, marhaba, namaste, ni hao, everyone. Welcome to Crime Watch Vault. Today's story takes us to Vietnam, a Southeast Asian country known for its rich cultural heritage, stunning landscapes, and a rapidly growing economy. With a population of around 98 million, Vietnam has transitioned from a centrally planned economy to a more market-oriented one, achieving significant economic growth and development in recent decades. Key sectors include manufacturing, agriculture, and services, with an increasing focus on technology and innovation. VietinBank, or Vietnam Joint Stock Commercial Bank for Industry and Trade, is one of the largest and most influential banks in Vietnam. It is a state-owned commercial bank, established in 1988, and plays a crucial role in the country's banking sector. VietinBank offers a wide range of financial services, including retail and corporate banking, investment banking, and asset management. It is known for its extensive network of branches and ATMs across Vietnam, and its involvement in significant national and international financial projects. Before we get into the story, don't forget to like, subscribe, and click the notification bell.
Huỳnh Thị Huyền Như,
A name etched in infamy within Vietnam's banking history, was born into a relatively unremarkable family. Her early years were marked by diligence and an apparent aspiration for a stable career in finance. After completing her education, which included a degree in finance, Như embarked on a professional journey that initially seemed promising. Her academic background provided her with a strong foundation in financial principles, enabling her to secure a position at VietinBank, one of Vietnam's leading state-owned banks. Her rise within the bank was swift, a testament to her capabilities and the trust she garnered from her superiors. However, beneath the surface of her professional success, Như harbored ambitions that would ultimately lead her down a path of deceit and criminality. Between 2007 and 2011, she orchestrated one of the most extensive and audacious frauds in Vietnam's financial history, defrauding banks, companies, and individuals out of nearly $400 million, a sum that equated to approximately 3% of the country's GDP at the time. This massive fraud was not merely a series of isolated incidents, but a well-planned and executed scheme that highlighted significant flaws in Vietnam's banking oversight and regulatory frameworks. Ny's fraudulent activities centered around creating fake deposit certificates, which she used to lure investments by promising high interest rates. She exploited her position at VietinBank to forge documents, manipulate records, and fabricate transactions, thereby presenting a facade of legitimate investment opportunities. Her promises of unusually high returns attracted a wide range of victims, including other banks, corporations, and wealthy individuals. The high returns promised were too enticing for many to pass up, and they invested substantial sums without adequate due diligence. To perpetuate the scheme, Như employed tactics reminiscent of a Ponzi scheme. She used the funds from new investors, to pay the promised returns to earlier investors, creating the illusion of a successful investment strategy. This not only helped maintain trust among her investors, but also encouraged them to invest even more. Her intricate knowledge of the banking system allowed her to manipulate internal processes and conceal her fraudulent activities from auditors and regulators for years. Integral to her scheme was a network of accomplices, including several of her colleagues at VietinBank. These accomplices either willingly participated in the fraud or were coerced into compliance. Their roles varied from facilitating transactions to altering records and creating forged documents. This collusion within the bank underscored significant weaknesses in the internal controls and oversight mechanisms that should have detected and prevented such large-scale fraud. The unraveling of Nguyen's scheme began with routine audits that raised initial red flags. As discrepancies in the accounts she managed came to light, a more in-depth investigation was initiated. Investigators discovered forged documents, irregular transactions, and a complex web of deceit that revealed the true extent of her fraudulent activities. The discovery led to Nguyen's arrest in 2011, a high-profile event that garnered significant media attention and public outrage. The subsequent court proceedings were a spectacle of public interest, drawing extensive media coverage and highlighting the pervasive flaws in the banking sector. During the trial, which lasted several months, the prosecution presented detailed accounts of how Nguyen orchestrated the fraud. They showcased the breadth of her deception, the complicity of her accomplices, and the massive financial impact on the victims and the economy. Nguyen was found guilty of multiple charges, including fraud, embezzlement, and forgery. In 2014, she was sentenced to life in prison, reflecting the severity of her crimes and their extensive impact on the Vietnamese economy. Her accomplices received varying sentences based on their level of involvement and complicity in the scheme. The Huỳnh Thị Huyền Như case exposed significant loopholes in Vietnam's banking regulations and internal controls. The absence of stringent checks and balances allowed Nguyen to exploit the system for years without detection. In response to the scandal, Vietnamese authorities and financial institutions undertook comprehensive reforms to strengthen the regulatory framework. These reforms aim to enhance the transparency and accountability of banking operations, implement more robust auditing and compliance mechanisms, and improve overall governance within financial institutions. One of the critical measures introduced was the requirement for banks to adopt more sophisticated technology for tracking and monitoring transactions. This included implementing advanced software systems designed to detect irregularities and automatically flag suspicious activities. These systems have since played a crucial role in enhancing the ability of banks to identify and address potential fraud in its early stages. Additionally, there was an emphasis on improving the training and professional development of bank employees. This included regular training programs focused on fraud detection, ethical banking practices, and compliance with regulatory standards. The goal was to ensure that employees at all levels were better equipped to identify and prevent fraudulent activities, thereby creating a more vigilant and proactive banking environment. Another significant change was the tightening of regulations surrounding high-interest deposit schemes, which were at the heart of Nguyen's fraudulent activities. New policies were implemented to limit the interest rates that banks could offer on deposits, reducing the temptation for banks and individuals to engage in risky and potentially fraudulent behavior to attract capital. These regulatory changes were aimed at promoting more sustainable and ethical banking practices. The government also established stricter penalties for financial crimes, signaling a zero-tolerance approach to fraud and corruption within the banking sector. This was accompanied by efforts to enhance cooperation between financial institutions and regulatory bodies to ensure a more cohesive and effective response to potential threats. The establishment of dedicated fraud detection units within major banks and the creation of centralized databases for monitoring high-risk transactions were among the measures introduced to improve oversight and accountability. The Huỳnh Thị Huyền Như case serves as a stark reminder of the potential for insider threats within financial institutions and the importance of maintaining robust safeguards to protect against such risks. While Nguyen's actions caused significant harm, the reforms that followed her exposure have contributed to a more resilient and transparent banking system in Vietnam. This case underscores the necessity for continuous vigilance, innovation in regulatory practices, and a commitment to ethical standards in the financial sector. Nguyen's story is not just a tale of crime and punishment, but also a catalyst for meaningful change in Vietnam's banking industry. It highlights the critical need for effective oversight, the dangers of unchecked ambition, and the resilience of a system that can learn and adapt in the wake of scandal. The lessons learned from this case continue to shape the policies and practices of financial institutions in Vietnam and serve as a valuable reference for other countries facing similar challenges. In conclusion, Huỳnh Thị Huyền Nyu's fraudulent activities exposed severe vulnerabilities within Vietnam's banking sector, leading to significant financial losses and a crisis of confidence. Her eventual arrest, trial, and life sentence marked the beginning of a transformative period for the country's financial regulatory landscape. The comprehensive reforms that followed have strengthened the banking system, making it more robust and less susceptible to such large-scale fraud in the future.
The case of Huỳnh Thị Huyền Như
remains a powerful example of the need for ongoing vigilance, innovation, and commitment to ethical standards in the financial sector to prevent similar occurrences and safeguard economic stability. Thank you for watching. Leave a comment in the comment section below.